Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Global Alts Miami by iConnections, and joining me for the segment, we have Sebastian Pedro Bea. He is president of Coinbase Asset Management. We're here to discuss the next use case milestone for digital asset integration. Sebastian, it is great to have you with us, and it's interesting, the past 12 to 18 months, it feels like a lot of milestones have been reached within the digital asset space, but there's still a lot of work to do.
Well, look, you talked about time. Time's not linear, and we in markets, and we talk about that at Coinbase Asset Management all the time. And 18 months, almost nothing was happening, and say like in the last 18 days or
Right.
or maybe 2 weeks, it seems like the entire world has changed quite quickly. We're seeing, incredible change, and I think it's still hard for the market environment, to really understand how much has changed, and is this really real, and what are we going to do about it? But I think, being here and speaking to a big number of investors, what we're seeing is there's a huge amount of interest in just education, saying, okay, this is happening. What does that mean for me, right? Whether I'm a sovereign wealth fund, a large asset manager, a family office, everyone is asking a very similar question because they've been paying attention and they understand that things were changing, but they didn't think it would change this fast, right? The speed is caught most of us kind of by surprise.
Yeah, well, it's interesting, when you cover these conferences once a year, different themes, you learn about, and, it's a regular course of our coverage as well. What I mean by the past 12 to 18 months, integration and user experience. When you start hearing user experience, that indicates in my mind anyway that there's some maturation within the space, and we're understanding it better. And again, from year over year, looking who's here and the conversations that are even happening on panels.
Sure.
That's a great benchmark to kind of detect where it's going.
Well, look, a couple big things have happened in terms of integration. Obviously, the ETFs that happened in the US were substantially beyond expectations. So those ETFs in aggregate raised about $120 billion in the first year. That's well beyond what anyone anticipated. Even in the case of BlackRock with their iShares ETF, IBIT, the open interest for their ETF is now 50% of what the offshore exchange Deribit does. These are big changes. So we are definitely seeing integration into the mainstream there. I think what we're really excited about is really what's coming for the big story of crypto, which is how it's going to upgrade financial services, right? And the first step, which we discussed earlier, is stablecoin, right? Stablecoin seems quite likely to be headed into the regulatory mainstream in the US, meaning it will become uncontroversial and part of everybody's wallet and account. And that integration, when it happens this year, and our expectation it probably will, is just going to be a sea change, because money will be programmable at the speed of the internet. And that sort of change means that we can look forward to putting credit on chain, because if your money can be programmed and can move at the speed of the internet, well, that just gives you a completely different framework for how you think about how much cash you need to hold or not hold, and how you actually run your own finances, whether you're a company or a person. Yeah. This is like a very, very big change. And look, we've been waiting for the upgrade of financial services for some time. It's reasonable that this takes time, because money and assets are different than information, right? We have rules that we follow that are really important, AML, KYC, et cetera. And so it's hard to upgrade the financial services industry, because we do have rules that we need to abide by, but it's starting to happen, and we're pretty excited about it.
It is, and we were talking about this off camera, how the way it traditionally operates in verticals, or I'd mentioned silos. And so the next milestone would be getting it to that horizontal place. So if you could explain that at a high level, why that is so key, where it becomes ubiquitous or utility to us, and back to that whole user experience thing. I don't care how I get from A to B, I just want it to work.
Right. Well, what's happening is, in the traditional markets, you're so right, we see so much in the way of silos, meaning there's a US market, there's a French market, there's a Spanish market. Every country has its own exchange, and even there's silos between equities and fixed income, and public and private. Crypto is a fundamentally horizontal and global technology. It's open, it never closes, and everybody can interact with it. So when you think about a network that's global, 24/7, and available to everybody, doesn't turn off, right? Markets still in the U.S. do turn off and turn on. This is a very, very big change. And so what it means is we're taking assets from offline to online. And that is a really big deal because it's going to knock down all of these silos and bring equities and bonds, public and private assets, all actually into, at one point, into the same wallet. Right? So the potential for developing products that can, better seek a client's need is just going to improve when, instead of all these frictions that you have to go through with different managers doing different things in different silos, all of this is eventually coming, not to one blockchain. There'll be many blockchains for a very long period of time, but the method of engagement is that we're going from those silos up to these programmable networks, and it will look and feel as though there's only one market for assets.
But you make a good point too, where it's not specific to one blockchain. It's like in traditional trading, you have different routes that you take, or you have different market makers that you work for to source liquidity. So there's always going to be choice, right? It's not like you're completely cut off from having these kinds of choices. So essentially, from what you're saying, it's not necessarily the next product or the next ETF that comes along. It's this framework. That's where the real catalyst is.
I think we have to recognize we don't know what's going to happen, and that's part of the thing that's so exciting. When the internet showed up, right, the first idea was, well, maybe we'll send some emails, right? But eventually something like Netflix came around, right? Now, Netflix needed fast internet, and it needed really, really cheap storage, right? When the internet first was around, storage was incredibly expensive. So like the idea was there for Netflix, but you couldn't actually do it. What we see with crypto networks and how well they're now operating, right, in terms of safety, I think things have improved a lot in terms of best practices and the institutionalization of the industry using qualified custodians, that sort of thing. We're putting together a bunch of really important things we've never done before, and so we don't know what that actually is going to be. Like, we could have things that are like the next Netflix to come out of crypto that's hard for us to perceive right now, right? Blockbuster didn't necessarily see Netscape coming as well as they probably should have done, right? If they did, they would have built it themselves, right?
Right.
And if you think about crypto equities, we haven't really had like a big IPO wave, big M&A cycle this time around. So it's reasonable to expect that the collision of all these technologies and capabilities are going to bring outcomes that we're not sure what they're going to be. But in general, it's going to accrue to the user and to their experience, in our view.
And I think it's a great correlation that you bring up, Blockbuster to Netflix. I mean, if you think about the model of Netflix when it first started relative to where it is today, it's night and day. So these are all going to continue. Our conversation about platforms that exist now could look very different next year.
Absolutely.
And I think this was fascinating, and it's happening at a faster rate than it might have back in the 90s when we were trying to figure out what the internet looked like.
I completely agree. Look, we just want to make sure that we're not the people with the envelopes, right?
Right.
That we have to follow the rules. We have to do the right thing because money and assets are follow a much higher standard than information, right? But as that innovation comes through, we're really excited about some of the investment products that can be delivered ultimately to clients. And I think it's going to accrue to the user in terms of more power and more choice. They're going to be able to get access to things in 2 to 3 years that they never could have had 5 or 10 years ago. So democratizing finance, I think, is going to be a big theme because when we upgrade finance with crypto rails, and we're excited to be a part of it.
All right, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from Global Alts. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.